Hello. What's going on, everybody? Welcome now, Stock Trades. How's everybody doing today? All right, ladies and gentlemen, this is the video that you do not want to miss. This is an incredible video. We're about to do some due diligence. That's going to be incredibly amazing here. Just setting up the mic. Let's see if you guys can hear me. Mic check, 1, 2, 3. Make sure we're all connected. All right. So let's see. Let's go ahead and push up the stream here. What's going on? Shinitsky being the first one on the chat is my second greatest achievement. My first, joining the Al Stock Trades and smashing the like button. Man, seriously, you should be head of marketing. That's amazing. That's just perfect. You'll have many more. No doubt my conviction in the trajectory of my life right now is unbelievably high, despite mountain of shit that might get thrown at me. Now tell me about it. That's how I feel. Nice lemonade you got there. This. I guess we can call this lemonade, right? All right. Oh, we got a new person here. Are you calling me woke? Is that what that means? I'm just kidding. No, I probably means something, right? Drunk Cal is the best Al. He's playing with the new camera. Oh yeah, look at this. We got the new camera going. Hey, ho, kind of going like this, right? All right, and the camera following. All right. I got my stock tips from a drunk homeless guy. Can't hear you. You can't hear me? No mic? Can you hear me now? Hopefully you can get it done in 13 minutes. I got a jet here. Oh yeah, you gotta go do a jet. Good. You guys can hear me? Make sure you guys can hear me, okay? Can you guys hear me? Yes, no, maybe so. Mic is good? All right, good. Okay, ladies and gentlemen. This is by far an important video. I just spent the past couple of days doing some financial modeling for Clover Health. This is an incredible development I want to share with you. This goes back to this. I'm going to remove the online chat right now because it's just you guys can still comment. It just won't show up on the screen. So we did some modeling here. And I went ahead and did some calculations. And ultimately, I've come up with a projected net income for Clover Health for 2025, of course, which I'm not confident in, but 2026 and 2027 projections. Specifically, I went ahead and did two different types of 2026 and 2027 projections. I did a 14% increase projection, which is a CMS rate call, and of course the star ratings from 3.5 stars to 4 stars. But I also did a normal one. I like doing the normal ones because it gives me a potential, ability to say, okay, well, this is a conservative view, and as you know, I'm conservative until proven otherwise. Like I said, 2024 will be the year of just proof of concept. I think 2026 and 2027 is going to be the year of access to the teens and 20 teens for the stock price. I believe we're going to hit in the teens in 2026 and 2027, right? You heard me. You know I'm very conservative. I believe that we are going to hit the teens in the stock price in 2026 and 2027. The work I'm about to show you, this is a thought process case project for retail investors out there. What I'm showing you now will mathematically turn into a software where individuals will be able to go ahead and input the ticker and utilize our financial data and be able to output this research that's taken me 5 hours, 6 hours to do. In the future, I will not release this. This will only be released to lifetime access members. What I'm about to show you is what institutions don't want you to know about. I just purchased another $10,000 in the stock today. Last week, I put in another 10 grand. In the past week, I put in around 50 to 60 grand back into the stock, right? So right now, the portfolio is sitting at 1 million. If you go ahead and take a look at it, from a perspective here in the January high before Trump opened his mouth, the portfolio now is at, we used to be at 1.45 million. Obviously, the larger account has around 15 million. This is a 1.45 million. On a year perspective, the portfolio is up 437,000, 74.65%. Right now, we're going to go ahead and do obviously today, interestingly, the portfolio is down $54.55. So I didn't really want to put that in there, down $54, right? But in the morning, it was up 63,000, and I was hoping that potentially we could have gotten to that mountaintop, right? But unfortunately, we're going to have to wait another day. So in this video, I'm going to show you the projections, and we're going to take that projection and we're going to do two different types of price target projections. One is going to be the earnings per share, and the other one is going to be our proprietary intrinsic value calculation, which we went ahead and upgraded. Yes, they heard that right. We upgraded it. Again, this research I'm democratizing it early on to showcase to people out there that are the naysayers that say, oh, the stock market's a gamble. But in the future, once we get to 2028, 2029, and when the lifetime access will increase, all these calculations are going to be central, because it's important for me not to release this information and to keep it internally. Why is that important? Because if we release this information, then it's going to decrease our edge. And it's unfortunate that it works that way, but there's only certain amount of options available for covered calls and cash secured puts. So given that, we have to limit the accessibility of this information, because people can make a lot of money on this information. We've had people go from 74,000 to over $1 million. And we have to limit that, because then there won't be any room for our lifetime access members. So we're going to be restricting this. Okay. But as of now, we're going to be democratizing it. And a lot of my lifetime access members are like, shut up about this. But really, though, I just want to show you guys, because this is life-changing information, what I'm about to tell you. All right, this is Al's FU account. I think it's possible for Clover might get acquired by United. No, Oprah, I disagree with you. The reason why is because the founders own so much stake in the company that they would reject that. And many of the shareholders would actually reject that as well. That's number one. And number two is the reason why Twitter got taken over was because they did not own that many shares. In fact, I think they owned none. So that's why they were able to get a hostile takeover. Clover's not in that position, right? Yes, let's take that projection and tell Trump, right? United is under criminal investigation. Is it under? We already know that, but is this something new? Is this like a new news? Is there something new, or this is from what we know, right? All right, so and as you may know, my father-in-law is, excuse me, got a little beer burp there. As you guys know, you guys are probably seeing it in the volume chain. There was a huge volume today, and yes, that is most likely him. And that's about $25 million will be pounded into Clover Health, as we believe that this company is about to explode. And I'm going to explain. Okay, so now with that, and there's other companies that I'm looking at right now that we're going to be releasing lifetime access members that I believe are ripe for the fruit. So that all that's going to be in there. And so with that, let's go ahead and do our analysis. So my favorite part also, this is kind of funny. B-Rob, is that you? All right, so, all right, guys. So is that a blue moon you sipping on? This is called Samuel Adams Summer Ale. It's actually pretty good, and it's a new keg. It's a fresh new keg, so it's really nice. It tastes really it's really nice, guys. All right, so let's go ahead. And I was like, hell no, United can't have Clover, but they can sure as hell pay for counterpart assistant. Absolutely, I agree with you 120%. And I'm not. I want to release something, but I don't want to. I don't want to call these people out because it's just not fair. So again, it's all publicly available information. I'm not going to, this is fine, but I'm not going to call the person out. So in the past 4 hours, somebody from UnitedHealthcare started following me. He's a data analyst and he works for software for UnitedHealthcare. And he's also an investor. So I'm thinking to myself, why is a data scientist from UnitedHealthcare following me? Could it be that UnitedHealthcare potentially had a partnership with Clover Health's counterpart assistant? And potentially, this guy was saying, wow, this stock is undervalued. He looked the stock up. You look up the stock, you find me. Then he followed me. Again, I don't know if this is a connection or speculation. I think as of now, I'm documenting it as speculation, but there's a clear problem that United has, which is a medical cost problem. And there's a clear solution that Clover has, which is a counterpart SaaS solution. The projections I'm about to tell you right now, ladies and gentlemen, he's looking for really good job. It's so funny. So the projections that I'm about to show you right now does not include SaaS. I'm going to repeat again. The projections I'm going to show you right now does not include SaaS. So I wish I can put those projections. I don't know what they are, but I will tell you, if Counterpart brings $200, $300, $400 million and 60% of that gross margins, then that can go directly into net income. And ladies and gentlemen, you guys are going to be shitting bricks. You know how much money you guys are going to be making? You guys are going to be shitting dollar bills coming out of every orifice of your body. Okay. All right. So before we get to that orifice, let's go ahead and get to the base, which is this profitable Medicare Advantage program. So first things first, let me just explain for all my technical folks out there. We've done this calculation before. I just extended it now. So here's Q1 2024, and now here's Q1 2025. And what we did is we projected this and we calculated the percent change. We then went ahead and we projected Q1 2025 to projected Q1 2026. And we found that in 2020, because first off, before I get ahead of myself, Q1 last year, 2024, they were around negative 19 million. I know it said negative 14, but I removed that one-time payment. It said 4 million, which brings it to negative 19. In Q1 2025, they only lost negative 1.27 million, which is improvement from negative 19 million. So if we were to extrapolate this growth from Q1 2025 to projected Q1 2026, we get 27.90 million. Obviously, there's a lot of math here. We did the projections, so you don't have to worry about it, right? Excellent. Looking forward to it. It's going to be amazing. Okay. So, also Batty is one of our, she, I call her, just a sniper growth value investor. She picked up Palantir when no one believed it. And, she's a self-made multimillionaire, right? Teach me how to ship money out of my holes. Al, I need to buy more Clove. Let's go. Okay. But in all, let's see here, but in all honesty, guys, really though, I mean, this is really cool. If we, so what I did is I then took the projected Q1 2026 and then I projected it with the projected Q1 2026 plus rate change increase. Now, what is that rate change increase? It's the 9% that Trump increased, and it's that 5% increase from the 3.5 to 4 stars. Okay. And I went ahead and got Q1 2026 at 31 million. So it was an improvement, and that was the improvement. I did all the calculations how normally you would find it on the financial sheets. And then what I did is I projected normal, I'm going to call it normal Q1 versus the increase 14. I'm going to call it, so normal Q1 will be the normal one, and then the 14% Q1 is the added bonus. So if you go ahead and project the normal Q1 2026, I went ahead and created a normal Q1 2027. So now I'm projecting 2 years into the future to figure this out. based off of this here, guys. If you go ahead and look at this, you get a $69.64 million in net income for Q1. Again, guys, that's a lot of money, right? And that's just one quarter. And then if you do the 14%, 2026, that's 31. But if you do the 14% for that's Q1, sorry, for 2027, that's 78 million, right? So we went ahead and did that for every quarter. This is Q1's, and then we did it obviously for Q2 2026, and we did it for Q3, Q4, and Q5. So essentially, we went ahead, we projected, you know, 5 different pathways. The first pathway, which is this year, which I'm not really confident in, but that's this year. The second pathway is the normal 2026. The third pathway is the third pathway is the normal 2027. The fourth pathway is the increase of 14% for 2026, and the fifth pathway is the increase of 14% to 2027. Does that make sense? Off of the carryover of 2026. So, I'm an investor. I want to make sure I'm conservative. I removed the 14%, assuming that Clover is still at 3.5 stars and Trump didn't do his payments. So everything I'm about to show you on the normal 2026 and 2027 is conservative. And even I'm going to show you the projected 14%, that's still conservative. And you might ask yourself why? Because it does not include SaaS. It does not include counterpart assistant. You understand what I'm saying? So all these projections I'm showing you are pretty conservative, if you ask me. Okay. Yes, this is just the MA business. There's no SaaS. Looks like a study area at a college library. Oh yeah. So this is my father-in-law's golf course. He, as you can see here, he went ahead and purchased it a few years ago, and currently it's managed and consulted by Troon, and they're doing a wonderful job here fixing the grass and whatnot. So that's why I'm here right now, enjoying the view, and that and hopefully to all my lifetime access members, we're going to have a summit here, and then hopefully in the other golf courses that we own around the country, and we're going to essentially be able to really create a lot of value for our lifetime access members. Yeah, and I can't wait to see you there, and also in Vegas, right? Al has to whisper, no yelling on lives. No, yeah, I have to whisper. Yeah, right. Can you show us price with and without Trump's lip zipped? B-Rob, you've had it with Trump. B-Rob now is a Kamala Harris supporter. He has turned Democratic. He no longer likes Trump. B-Rob is as blue as his portfolio, blue as his little profile here. As you can see the B in here. He is blue as blue can be. That's it, guys. B-Rob has capitulated. He is now a new right. Everything good that's happened is Trump's economy. Everything that's bad happened, it's not my economy. This is Biden's economy. It just sounds like an old grandpa that this doesn't make sense sometimes. It's Biden's economy. That's not me. He posted one time on Truth Social. He said that if I was president, this was never happen. And I almost wanted to comment like, sir, you are president. You are president, sir. Oh my God. Okay, so anyway, enough having fun with this guy, but he's a funny guy. Okay, yes, I gotta focus. Yes, focus. Back to the price targets. Okay, so now let's go back. Okay. So you guys got to keep me honest. You see how B-Rob derails me? You see B-Rob, stop it, D-Rob. Okay, so now, let me. Oh wow, what is this? Oh wow, yeah. I get it because we're shedding money. That's what's going to happen. You know, right? If you run out of toilet paper, just do some covered calls. There you go, right? Do some cash secured puts, and there's your toilet paper. Okay, who needs toilet paper? It's probably cheaper that way. You can save time, you know, going to the market, right? So all right. So now that we have this, what I'm about to do right now is we are about to calculate the. So what we're going to do right now, guys, is we're going to be calculating the price target for Clover, but doing it in a way that we have not done before. We have not done this before, ladies and gentlemen. But to do this, we have to look at the forward PE of what analysts are thinking for the Russell 2000 stocks. And there are 3 different methods of calculating value when you look at price to earnings. Okay. Right. To do this, ladies and gentlemen, we have to look at the normal Russell. And this is a historic forward PE of the Russell from a perspective of 2004 to 2025, which is around 20 plus years of data. And we're going to go ahead and take a look at the Russell 2000. Hold on, Michelle, can you please shut down the door because it's hot, and lower the AC because it's hot, guys. What the hell's going on? She has the door open. Lower the damn AC. Okay. Even here. All right, Michelle. All right, so let's go back here. So we have the blue, which is growth. If it's a growth stock, which is what Clover is, it'll be a forward price to earnings ratio of 36.7. If it's a value stock, it'll be a price to earnings of 18.2, which is in green. And if it's a normal stock, it'll just be the red, which is 24.6. So it goes value, normal, growth. Okay. So if you go back here and you go to our calculations, you have value, normal, growth. Okay. And we've taken these numbers, right? These numbers are not coming out of thin air. These numbers are coming from data. Okay. And it's not just manipulated data. Oh, no. This is coming from the Russell 2000 data, right? So this is 2000 collection of baskets of stocks to give us a forward PE ratio, right? That is where we're getting this data from, right? Again, I don't like to, give you bullshit, right? So we're not other YouTubers, right? We are all stock trades, right? All right, so let's drink some beer, right? Give me some beer. What is that? Oh, Philly cheesesteak. I'm okay. Thank you. Enjoy. I'll have my nice beer. That's good American beer, right? All right, so I feel like everything is slowing, compounding, and one day it will explode, and finally we will be rewarded. Oh yeah, and you'll see the compounding gets been. I am sick of him. I voted for him. Right? Let's see. I think he was trying to say flushing money down to. Dear, oh God, right? A leak seeker, right? We have a leak. Dear God, please keep this above 3 so I don't spend money my wife told me to leave alone. Drink more cold beer. What's going on, Drew? All right, so back to this. So now that I explained to you how we're calculating this, let me please remind you of something. Okay, so if you don't recall, remember when I calculated EPS here, and I went ahead and we did this calculation in one of the videos that we made a couple weeks ago, and we got an EPS of 0.105. If you round this, it'll be 0.11, so 11 pennies. 11 pennies for 2025's earnings. Well, ladies and gentlemen, if we go ahead and if we go to Yahoo Finance, interestingly enough, and if we go to Clover here and we look at one of the analysts by pressing the button here, we can see that one analyst is suggesting 11 pennies for the current year. Obviously, I don't believe their 2026 projections because their revenue growth rates are off. They're thinking that Clover is going to grow only 22%. Now, it could be Clover could decrease their growth rate to 22%, and if that's the case, then okay, then we have to redo this. We have to redo all these calculations. These calculations don't make any sense. But I think that since they're returning the growth, I think that they can continue growing at this pace. Now we'll see if they will, and if they don't, then we may have a problem, right? And so we have to figure it out. But the more data we get, the more data we'll see, and the better we will get at to the truth. But overall, they think it's 11 pennies, and based off. But here's the thing: if you asked them a year ago, did they think it was 11 pennies? They sure didn't. So how can we trust this 18 pennies, right? They're going to probably have to revise it. How many times have they revised Clover Health? They've always had to revise it, right? So based off of this, we were able to calculate the same calculation of what this analyst did. And what's interestingly enough, what the other analyst did is they tried to distort the data on the Bloomberg terminal, but they didn't realize that Al Stock Trades knows how to calculate his own EPS, right? And historically, that's only taught in Wall Street. You might, a lot of these people are asking probably, how does he know this? Has this guy worked, under, the curtains? And no, I have not, right? I've been doing this for a long time, right? So now that we understand that, now let's go ahead and look at this information. So I'm going to go ahead and I'm going to turn this into a table, okay? I'm going to turn this into a table so we could see. So it'll be a nice, good, should we go blue? It's a nice blue table, right? That's a nice blue table. Let's go ahead and do that, shall we? And let's go ahead and let's just see if we can increase the, can we increase it a little bit? There we go. That's what I like. There we go. Just going to increase it so we can see a little bit here. So now that we have this, okay, we're going to go ahead and just, so as of right now, there are two portfolios. The one that I'm showing to you all has approximately 321,000 Clover shares, almost 322,000 Clover shares. Okay. And it's slowly, going up, right? And the other account I have has 100,000 Clover shares. So altogether, we have about 421,000 Clover shares, right? But in this calculation, I'm just going to estimate the portfolio value to the 321,000 Clover shares, specifically 321,780 shares. And just to give you some perspective, and because that's the portfolio we're going to be following from here on out, right? So you guys can see kind of how this works, right? So based off of this, what we're going to be doing now is we've taken the 18.2, 24.6, and 36.7, which is the numbers for this here, right? And we went ahead and we did it for 2025. And if we do a value play, normal play, or growth play, you get anywhere between $1.91 to $3.86. Now, interestingly, if you take the average of these two, now let's see if we can take the average. If we take the average of these two and take this plus this. Wait, actually the average already gives you the average, right? All right, that's fine. We'll just do it how we normally do. If we take the average of this plus this, divide by 2, you get $3.22. Currently, what's it trading at for Clover? Wow, $3.21. So the market right now is pricing it at the halfway point between the normal play and the growth play, based off of the expected potential earnings of Clover Health off of that 11 cents, or specifically 0.105, which is 11 cents that we calculated on the other videos. So if we were to do this analysis and we were to conduct this, let me go ahead and make sense of this. In 2026, if Clover Health, this is for all the math and projections, I'm just going to give them to you, right? Without the 14% growth, I expect Clover to have $183 million of net income. For 2027, without the 14% growth, I expect Clover to have $368 million of net income. Now, if you include that 14% increase with the star rating, and of course your beautiful Trump 9% increase, then yes, we could get to 204 million. And then for 2027, with that Trump and CMS increase, we can get to 415 million in 2027 of net income. Okay. Now, based off of this, ladies and gentlemen, based off of this, we went ahead and calculated. Jesus, all right. Guess I'm already feeling it now. I guess the only solution is drink a little bit more here. All right. All right. So back at it. So we went ahead and did the earnings per share calculation, and then we went ahead and did the price targets, and we did 5 pathways. But these are the 4 we're going to focus on because we're in this year, right? S1, S2, S3, and S4. And you can see from a love the transparency. Absolutely, absolutely, right? If we go ahead and if we do the S1 in 2026 net income, we go from $6.55 to $13.21, right? Obviously, that's included in the range. If you add that 14% increase for 2026, you get $7.33 to $14.77. If you do the normal 2027, the S3, you get $13 to $26 range. And if you do the S4 with the net income with the 14%, you get $14.85 to $29.29, which is around $30. So this is kind of where we're at using this data that we have and utilizing all of the math that I already did for you. So what does that mean? Well, I think Clover could be anywhere between $3 to $25 in the next 2 years, or be honest, $3 to $29, $3 to $30 in the next two years. Now, the thing here is this does not include Counterpart. This does not include a SaaS product, and we already know they're signing up people that they don't have to release, and that's a big deal. That is a big deal, right? Let's see here. I guess the only solution is drink more. You won't find a suit on Wall Street that is as cool as out. What's up, dude? Whoa! What year can we include SaaS? The only time we Clover minded Kevin, the only time we can include SaaS is when they give us a little bit. They got to feed me some data. They got to feed me data, and once they feed me data, I will be able to project that data. And we got national players too. So that's a lot of numbers. I like numbers, right? Right. So now that we have that, now that you know where this could go from an earnings perspective, we're going to then now transition this net income that you see here. These are all net income assignments. These are all net income. And we can transition this into doing an intrinsic value calculation. We're going to be doing that. But before that, I wanted to show you kind of where I expect the portfolio is going to be. So I went ahead. Oh, by the way, this is the net income we're going to be talking about here. This is the net income. Okay. Now, what I wanted to do is I wanted to highlight what the portfolio is going to be. So as of right now, ladies and gentlemen, the portfolio is, oh, wow. We were down $55. Now we're up $3,100. That's great. Right now we're at 1,025,000 something, right? Plus $3,000, right? So this is the portfolio now. Okay. Now in S1, this is the normal, and S3 is the normal. I can't highlight the S2 and S4 because that's using 14%, and I get it. We should do that. Clover deserves that. And of course, that's going to bring us more profitability. The problem is Clover Health's MCR is already low. And I'm afraid that they have to give some of that money back. So I'm not really using that 14%. Just understand that it can only get better. Okay. I calculated it, right? But I'm not using it. And I'll explain why. So if I do that, then by the end of 2026, the portfolio that you see that's $1 million is going to end up becoming $3.5 million. And then in 2027, that $1 million portfolio that you see that used to be 1.45 million is going to end up becoming 7.1 million. Now, of course, we got a high ball. What's a high ball? That's basically using the 36.7 growth play. Now, obviously, can Clover Health trade at a higher price to earnings? Of course. Look at Palantir. Palantir's trading at a price to earnings of 536 effing dollars. 536. That's a lot, more than 36.7. So this could explode. But again, we like to not compare apples and oranges, right? So, or apples to, Alex Karp atomic sized dong, dude. This guy's just right. So, but 25% of that, of 536, whatever the price to earnings is for Palantir, could become 135, right? And that's still a lot of money. That's better than 36.7. But if we were to do a high ball of S1 and S3, then the portfolio could next year go up to 4.2 million, right? Just like how the portfolio this year went up to 1.45 million, right? And then for 2027, on the normal projected value, the portfolio could go up to 8.5 million, right? So you're starting to see now we are starting to grow exponentially because we're growing with the net income. And like I told you, the net income is growing at an amount that you cannot fathom, that you cannot process in your mind. And what you do is, in order to process it, you need to go to the Al Stock Trades platform, go to the financial data and analytics metrics, open up Clover, right? And do enhanced AI analysis. And by doing that, what you do is you'll see very quickly that first the net income improved by, let's use this one, 37%. Then it improved by 79%. And you can see how the net income is just improving exponentially, right? And then if we were to fetch this data really quickly, and if we were to go ahead and just do the enhanced AI analysis, we could, just go off of this really quickly. So, net income improved by 73% from last Q1 in 2024. Q2 net income improved by 125%, and it was positive. It was a sign flip. 2023 it improved by 77%. Q4 it improved by 68%. And if you go back to Q1 here, it improved by 73%. But if you go to Q1 this year, it improved by 93%. So if you were to graph the improvements of net income, you start seeing an exponential increase. Now, the only person on the stock terminal that was able to figure this out is our wonderful, beautiful professor of physics. No shit, right? So you're able to figure it out. But you specifically said the free cash flow is increasing exponentially. That makes sense because ultimately, where does that net income end up going? To the free cash flow, isn't it? Right? Right? Let's drink. So as you can see, guys, everything I'm telling you is all data. There's no emotions here. There's no emotions. It's all pure data, right? And this is how the billionaires and hedge funds invest. And this is how people in lifetime access invest. Now, when we start seeing these types of values, ladies and gentlemen, we're going to get into a position of no return. Imagine it's going to continue going up. And at what, you have to ask yourselves, at what point now do we stop? And this doesn't include counterpart. So okay, when we get counterpart, stock will explode, and then we can go ahead and finally figure it out kind of where the value is. But let's say, for example, I'm going to just say that, let's say the value is $50, but then all of a sudden it starts trading at 150. Well, if it starts trading at 150, and then you're looking at it and you're like, well, wait a minute, it's trading 3 years of future free cash flow. So then start doing covered calls. Activate the insurance business. So let's go ahead and I think 5 billion is realistic in 3 years. At its current growth rate, that puts us at around 12. I am more concerned. So you say 5 billion, that's about a $10 stock price. You have to ask yourself in 3 years, that's for 5 billion. Where are you getting those numbers? Can you mathematically show me in the chat, how are you getting these numbers? Or is it like a gut feeling, right? So what is the risk? There must be a risk. Yeah, there are a couple of risks, right? The risk is you go into the investor calculate the investor report, and it'll show you the risks. What happens if the Clover AI doesn't work? What happens if Counterpart doesn't work? What happens if their medical costs start trickling back up? These are all risks that you have to monitor every quarter. Is that happening now? No, I don't see it. And based off of what it's trading at, and this actually, you bring a good point. Based off of what it's trading at now, when we bought Clover at around 60 cents, we were buying Clover at 2014 evaluations, 2015 evaluations, 2016, 2015, 20. So, I've been invested in the stock market for about 14.5 years. Let's just lower it, and let's just say 14 years, okay? I've been invested for 14 years. Now, so we got Clover at 2014 of levels of evaluation. How do I know this? Well, because if you look at Google bought Clover at around 2017 and 18 for about $1.7 billion, right? Or 1.7, 1.9. So if we were to say, if we bought Clover at 2014 evaluations, let's call it 2015. If we take 2025 minus 2015, that's 10 years. So we're buying a company that was worth much more before it became public, because it got trashed by investors selling. And now you see institutions are buying, which is a whole different video, which I've shown you before, and I'll show you again in the video. But you're getting 10 years of investing compounding power here. And then if you add it, then you can add it to your own investing. If I put 14, so I put 14 years of mine, because I've compounded my wealth for a long time. And then I bought Clover. And if I add 14 years of compounding plus Clover's buying it at, evaluations from 10 years ago, that's 24 years of vested compounding. And, it's like me investing when I was 7 years old. It's like me as a 7-year-old investing right now. That's how much compounding power that I'm getting. And again, that's hard for folks to understand. I'm just giving you the perspective of how these rich folks think. Okay. Okay. So, Al, why do meme stocks and Clove have an inverse relationship? So, well, I think because maybe Clove is not a meme stock anymore because it's becoming profitable, right? CEO prior to Toy wasn't great. Well, the CEO, his name was Vivek, and he's the founder, and he's really positioned the company to be strong. And I think the technological capability of pushing the company forward had to be Andrew Toy, and this guy Toy is the best. Can Clover's business model be profitable transferred outside the US? They answered this question on their investor relationship. You should go read it. I think they said they believe they can, but right now they're focusing on the United States market. Perfect. PLTR's contract with NIH is mostly for the data, but they developed Cancer 360 with PLTR to detect cancer. So absolutely, this is amazing, right? And Clover's that's not their business model. Their business model is to congregate all of that data and aggregate that and let the physician know that this is available, right? And that's where the market is for Clover, right? And it's about letting these family doctors, emergency doctors, and outpatient doctors be able to use the software. And that's where I think they really do a good job, right? So now that we talked about this, what I wanted to do really quickly, so now I showed you this software very quickly. Let me go ahead and show you. Let me show you the quantum charts. So this shows you institutional ownership, right? Now, very quick, let me zoom out of here. Since Batty, you're on the line here. If you look at institutional ownership for Clover, I'm sorry, for Palantir, this is for Palantir Technologies. And if you were to score it, we're obviously at a bullish score of 7 and a bear score of 2 with an overall bullish. And if you were to do 25, look at Palantir, guys. I mean, you look at the investor holdings, it's just literally shot up, right? Look at the total invested. We have about $132 billion invested into Palantir. In fact, in terms of ownership percent, about 49.48% is invested, of ownership in institutional own. So about the big boys own about 49% more, in Palantir. Obviously, new positions has surged. They're slowly decreasing now. We got increased positions. That's still up. So current institutional owners are increasing their positions. We have people that, are like, dude, this thing's gone up. Also, institutions closed it. Reduced positions have increased, but obviously, you're going to get that. And then here you have puts. So the put right now is slowly kind of ticking up, but it's near 1. So it's really not that bad. I mean, that's why it's bearish, honestly. But if that's the only thing, I'm sure that's why it was bearish, right? No. The closed positions and reduced positions. But again, you got some institutions pulling out, right? So, and I appreciate you, Batty. Yeah. So the thing, as you can see, this is our stock terminal. It is institutionally graded data. I mean, look how this is very powerful stuff, guys. I mean, like, just if you look at AMD and look at the institutional ownership and look at the graphs for AMD, look at like, or you know what? This is a really good one. Look at Enphase. Enphase business model has deteriorated in the interim, but just look at the ownership percent. The ownership percent spiked up here in 2016 to 2017, and it broke out of the simple moving average, and that is when the stock was 70 pennies, and then it shot up to 300 pennies. And as you can see, this is very accurate, right? So if now everyone's wondering, well, what's Clover? Can you show me Clovers? Yeah. So watch. Here's Clover. If you score Clover, again, you get a bullish score of 7 and a bear score of 2. That's bullish, guys. That's very bullish, right? That's just that's the same score as Palantir, right? So if we were to go ahead and look at this, guys, look at this. We're shot up now. We have more investors holding the stock, institutional investors, than ever since 2020 in the inception of the company, right? That's huge, okay? Right? This is just a small sample of what is available in the terminal. And this is one of our lifetime access members. This is just a small sample of what we have, right? I mean, how do you expect I'm a multimillionaire, right? How do you figure that, right? It all comes from the software that I created, right? That's what's been guiding me, right? Is this information. In fact, let me just go ahead, and for folks that are interested, if you would like access to the software, right? There's a coupon code. It will be expiring soon. It's SaaS, SAAS. It'll give you $1,200 off. It'll give you access to not only just the data, it'll give you access to everything else that we offer, right? It'll give you access to the community that we have that is over $45 million. And soon, in the next 5 to 10 years, we'll be approaching over $1 billion of net worth. That is the power of our platform, right? That is the power of what we're providing here. We're providing Wall Street data to your normal day American, right? It's unheard of, right? So going back now to the institutional ownership of Clover and going to the long range here, you can see, guys, look at the number of shares. It's been increasing. It's been increasing, right? Look at the ownership, total invested. It's gone up. It's broken out of hell. Look at ownership percent. We went from 15% to 21%. And I guarantee you, we're going to get back to those 40% glory days, right? Obviously, nothing's a guarantee in the market, but I believe that. I think that that's where we're headed. And I'm putting my own skin in the game, millions of dollars into Clover, right? Because I have strong conviction, right? And then obviously new positions. Yes, new positions, increased positions, right? And of course, you have some hedge funds that have closed some positions as well, right? And took some off of the table, but you have more holding than ever, right? So that supersedes it. And if you look at the put the call ratio, my God, we're at 0.69. We are low, meaning that we have more calls than we have puts. What does that tell you? Wake up, right? Wake up, right? Um, let's see here. Al, I want to buy it. I want to buy the lifetime access. I got to make money off of Clover first, and we'll be here. We will be here, right? Again, when I say lifetime, I'm talking 20, 30, 35, 40 years. I'm talking about my lifetime. And then right now, I'm going ahead and I'm pushing for lifetime to be even after my lifetime, right? So that's going to be a secession period that we're going to have, right? Because lifetime can be passed off to your offspring, right? Again, we're trying to create the most value here, right? And you can see from the data we're providing, I haven't given you any of my emotions. Nothing I've offered you has been emotion. It's all been strictly data. It's all been fundamental analysis and data. Okay. Now, I want to go ahead and I want to mention something. There are some things that I know because we have now two forms of AL stock trades. We have the retail investor side, and then we have the institution side, right? And the institution side that's been purchasing our stock terminal, I've been sending out surveys to them, and they've been answering. And unfortunately, so they've allowed me to share this survey to the lifetime access members, but unfortunately, I cannot share it online, right? And there's a lot of really good stuff that is in there that I'm getting direct access of what's on the street, and I'm taking that and I'm bringing it into our lifetime access, right? Right? I'm glad you caught that, Shant, right? I'm not going to publicly put that comment, right? I'm glad you got that. Right? Attention to detail. Excellent. Okay, excellent. Very good. Have you ever thought of maybe documenting Clove's journey and bringing light to the shenanigans that are played? You may essentially be delaying Clover's health climb, right? Wait. Wait, I'm confused. Clover has been punished because it was a SPAC, and exactly, and now it's reversing that. I don't know SAS from hole in the ground, but I like it. Right? No, absolutely. BBA make sure. Well, again, I don't know about that. Right? We like to do fundamental analysis. Right? Fundamentals. Right? Good. All right. So now that we did that, right? Let's go ahead and let's bring it back. We'll exit this. And now let's go ahead and show you the upgrade that we did. This is an incredible upgrade, ladies and gentlemen. Incredible. This is our new price target software. Ladies and gentlemen, I welcome you to the new intrinsic value calculation. I'm just going to go ahead and do a stock that everyone knows. Let's go ahead and do Tesla. As you can see right now, Tesla's base case is 155. We can go ahead and put So as you can see, Tesla's overvalued. And the reason why people are buying Tesla is because of the robo-taxis. The robo-taxis and the robots Optimus have not hit the balance sheet, and they believe that that is worth a lot of money, right? But as you can see, look how beautiful this is. Look at the bear case. The stock price is here. Look at the best case. This is probably not a good example. Let's look at another stock. Let's look at Oscar. Let's look at Oscar. Yeah, it's definitely not a good stock. Okay, so Oscar, we're gonna say 25%. Let's say it grows 10%. Let's look at the free cash flow. Oscar is such a good deal, guys. It is insane. Okay. All right, good. All right. So let me show you how to read this. So this base case, the intrinsic value is $15. Best case, the intrinsic, I was just trying to find you an easy example to read. The intrinsic value is $20. Bear case, the intrinsic value is $11. Recession case, the intrinsic value is $6.88. Okay. So now that you understand that, now let's go back to base case. Look where the stock price is. It's right in the middle. See how it's in the middle? It's because it's right at fair value, right? Now, if you go to best case, all of a sudden now the stock price is here because the intrinsic value is worth 20, but the stock price is 15. So it's near undervalued. Let's say if we go to recession case. Well, then if the intrinsic value, the stock price is $6.88, and don't remember Oscar went down to $6.50, and we talked about it on the channel, like I always do. We find multi-baggers, right? And soon we will be taking away this information from the channel and pushing it only to our lifetime access members because we've proven the point. We've proven the software works. And as you can see now, the stock now, this price here of the stock is that overvalued area. So you can see that this little thing jumps around like a little fish. And it tells you if it's overvalued or not. So let's go to base case now. You can see now it jumped right at fair value. There's something called advanced matrix. And when you click on that, you get this advanced matrix range, which tells you the stock price of where it should be trading at. Then if you go down here, now we upgraded this. Now you can highlight this. You can, if you forgot what free cash flow means, you can do it because we are an educational platform. You could go ahead and look at the equation, right? And then, oh, by the way, for folks that are like, Al, I'm pressing all these buttons. The issue is I want to take a screenshot and I want to submit it into our research division so we can talk to our other members that have a net worth of $45 million. How do I do that? Simple. You see this little C right there? You press it. That's for classic view. And this is a really good classic view. You press this and it gives you the recession case, the bear case, the base case, and best case, all in one view. And let's say you want that. All you got to do is you press this screenshot button. As soon as you press the screenshot button, you get a download immediately. This download goes ahead and downloads your intrinsic value. And then you could take this and then paste it into our research division where you can essentially talk to other members of stocks that you're calculating. Seamlessly integration, right? And beautiful part is this supports currencies that are other than the United States. So since we're on the classic view now, we can switch this to, let's say, Apple. It stays on the classic view. So now remember I told you stocks, they trade ahead of its, why do you think Warren Buffett's selling, right? Stocks that like Apple trade 2-3 years ahead of its cash flow, right? But you see how it stayed in its classic version, right? Because we kept it there. Now, let's say if we want to revert back to this spectrum mode, I like to call it, then if you look up the next stock, it's going to be on spectrum mode. But if you do classic mode, and if you search another stock, it'll be on classic mode, okay? Another thing is, let's say if you search BABA. BABA is a Chinese stock. Yes, it is traded in the New York Stock Exchange, but it's a Chinese stock. So if you go to revenues here, you can see the CNY in millions. So you know all these numbers are in Chinese currency. So in the future, in the next coming weeks, we'll be upgrading this to where it'll automatically convert, where you just put it in, it'll give you the stock price. But right now you have to convert it. So if you convert right now, usually Chinese stocks trade at recession cases because they trade at higher discount rate. They trade at higher discount rates. So all you got to do is take the recession case, and then you go in and you type in Shin to USD, and you type this here, and it's a $90 on the recession case. And you look at the stock price right now, it's trading at $119. So it's most likely trading in its bear case, right? But that's why what's his name? Michael Burry bought right here. Michael Burry bought right here at $80. It was near $71 because it was like easy money. But the problem is you won't know it's easy money because you wouldn't have done the calculation. Now, of course, before people come at me and say, well, when you buy BABA, you're not technically buying, BABA stock, you're buying from the Cayman Islands. Yes, I know. I've been in the market for 15 years. Yes, you're buying from the Cayman Islands, right? But still, right? People still buy, right? They buy the BABA. And as you can see, it dropped right at $99, which is, honest to God, right near that recession case, right? So I would say, Chinese stocks trade between the recession and bear case. Now, if you go to the bear case here, and it's 1,200, and if you go to the conversion here, that's $166. So if you look at the average, and again, Wall Street's are a bunch of dumb people. So you take this here and you add 90 and you divide by 2, you get 128. You see? So what is the stock trading at right now? 119, right? So it stopped at 134. So Wall Street is not that smart. They're a bunch of idiots. Trust me. All right. All they did is they added the recession and the bear and they divided by 2. Wow. Rocket scientists, right? All right. So now that you see the functionality of this new intrinsic value, Al keeps making changes to make it easier for boomers to understand, really appreciate all the hard work. Exactly. Right. So I know, Ass Full of Sass, one of our members, his name is Ass Full of Sass. It's kind of funny. Right. Yeah, I get it. Mr. Ass Full of Sass. I get it. Right. This is, I think this is better, right? But a lot of folks like Kevin that are boomers have a hard time understanding, what a 10-year projection. They don't. Those graphs are they're still there, but you don't see them. The calculations are behind the screen. But this is just an easier way for folks to essentially conduct these calculations. And again, what I've learned over 14 years, I want this to be you to be able to do this within 1 day. So imagine, with lifetime access, after a year, you'll become a master, right? And imagine after 5-10 years, what's going to happen. What I was trying to say is, could putting the spotlight on CLOV stock for retail with YouTube coverage be causing delay in positive performance? Well, I mean, potentially, because retail may not be selling, and that could delay it, you could say. But you would, as most people, like there was a mathematician, and that's what I've done. I've calculated the mathematical formula for you to win in Wall Street. That's pretty much what I've done. But there's this, asshole who's done a mathematical formula in the past. And what this asshole did was he never shared it with anybody. So he made all this money, and then it was in the 60s, and then a group of academic scientists released the mathematical and algebraic and a little bit of calculus to the world, and then that became the whole. That's how Citadel was created, right? And it's a shame because people keep it to themselves, and I really want you guys to taste of how to make millions like me. I really want you to see it. I really want you to feel it and see it. And once you feel it and once you've seen it, you know where to find us. You know exactly where to find us. We exist. We're there, but we're not going to stay open for too long. We're going to be closing the doors in the future. Okay. All right. So, Al, I'm late, but starting from the beginning. Start from the beginning. All right. You'll see her coming after. Like, oh, right. All right. So now that we went ahead and talked about Clover, we talked about the intrinsic value. Now let's use it for Clover. Forgot. Let's do it. Right. Let's do it. Okay. So to do that, first, I need to remind you of the cash flow statement for Clover Health. That's the balance sheet, right? So that's not the right. Let's go with cash. There it is. So this is about 47 million of discontinued cash flow. That's not going to show up again. So let's use 80 million. Let's even forget that 2.4. We're going to take 80 and we're going to subtract unpaid claims, which is 19, because let's assume that's not going to show up this year. But we also have to add back in 43 million, right? Because that'll bring us to zero. And then we're going to go ahead and we're going to add the potential millions generated for 183 and 368. So we'll do it for these things here, okay? So we're going to do these in real time. Okay? We're going to go to Google Doc to help organize our thinking. Okay? We're going to log in. Hold on. Just logging in. This channel is why Hood keeps buying Clove. And you saw that as the stock price dipped, retail investors bought more Clove. They're like, I don't want to be stupid. I've never seen that. So they're actually buying Clove, which is amazing. I'm buying more. Please sell. Get rid of Clover. Get rid of it. There's too much risk. Oh my God. Right? Please. I want to be a millionaire already. Right? I want to be a millionaire by tomorrow. Right? By the way, I'm gonna get a Rolex soon. So we will be Rolex twins, my friend. Okay, so now let's go ahead and do this calculation. Okay, so let's go ahead and kind of zoom in here and actually like it's like this. Okay, so excellente. So now we're gonna go ahead and we're gonna do again, like I told you, I am not gonna be doing the 2026 and 2027 free cash flow for the 14% increase. I'm not doing that. I'm going to wait, right? I'm going to do these right now. I'm going to do S1 and S3, okay? First, I'm going to do the normal. I'm going to show you. Okay, I'm going to do these here, okay? We're going to do these two different calculations. To do that, we have to start with the baseline of 80. We're going to subtract 19. But we also have to add back 43 million because it was negative 43 million last year. And we're going to go ahead and we're going to add 183 million. So let's go ahead and add these together. 306 minus 19. So potentially we could get a free cash flow of 287. Now we're going to go ahead and we're going to add 368 million. This is for 2027. We're going to add that 43 back. We're going to add 80 and we're going to subtract that 19. Okay. To do that, we get 472. We're going to make sure we confirm. Oh, Michelle, so the cafeteria closes in 6 minutes or is it close? Close? Huh? It's closed. Oh no. It's okay. Sorry, restaurant. She's like, it's a restaurant. Okay. It's a cafeteria, restaurant. All right, so because I'm doing numbers and I used to be a cashier. So because I'm doing numbers right now. I used to, so guys, if you don't know, I was a let me show you. So you guys know I was always working. I was always working, guys. So here's my resume. Oh. Right. So here, can't zoom in. All right, here's my resume. Here's all this other stuff here and whatnot. For some reason, I can't zoom in anymore, but look at my positions from 2017, 2011, high school cafeteria cashier. Right. So yeah, I started working when I was in 2007. Right. I was working as a high school cafeteria cashier. So I was working, my whole life, right? So I knew. That's why I said cafeteria, because I was like, oh, I'm using numbers. Crazy how the brain doesn't forget. Okay, so now that we went ahead and did that, so now this is the free cash flow. Okay, now because we're going to go ahead and do um, we're going to go ahead and do 25% growth rate, or let's see 23% growth rate, and then we're going to go ahead and do the 37% growth rate. So we can and we can go the halfway point. We'll do 30% growth rate. Okay, we can kind of see the price targets of this, right? And we'll do these different FCFs. Now we can look at the bull case, but I would say let's look at the base case and potentially the bear case, just so we can be humble with our calculation, given that we are projecting too much in the future. Okay, so let's go ahead and go here. Let's go ahead now and exit the classics mode. We'll go ahead and open up Clover, and then now let's go ahead and input the free cash flow. So this is going to be the 2026, 287, and then we're going to grow them at 23% first. We're going to say 2026. So the base case is $22.89. The best case is $32.94. I would say, because we're projecting, let's do bear case. The bear case is $16.99. And I would say let's do the advanced matrix on this. So I would say Clover next year could go anywhere between $12 to $24. Okay. And we could kind of go to a recession case and be a little bit more humble. And we could say anywhere between $6.76 to $11.42 if you really want to be humble. But again, I always like to do long range. But yeah, so imagine if they grow 30%. If we do that, then all of a sudden, let's switch to classic view. We get a stock price anywhere between $13 to $54. Let's switch to 37%, which is what they're growing at. That's $19 to $87. Okay. Now let's go back to 23%, and let's now do the $472 million of free cash flow. By doing that, you get for 23%, you get a recession case of $12.93 and a bull case of $49.01. You can see that base case is around that $34, which is around that $30 we were calculating regarding the EPS, right? Now, of course, let's go ahead and do 30, right? Then we go from $19 to $80 for Clover. And if they continue growing 37%, which is insane, then we could go ahead and get to $29 to $130 freaking dollars. And again, this is without SaaS. So I would say if we want to be humble, we can go ahead and do 20%. And we can then go ahead and just, from that angle, we'll do 20%. And I would say we can activate the advanced mode, and we can just do the advanced matrix. And I would say and that falls right in line. I would say in the next 2 to 3 years, ladies and gentlemen, the next 2 years, no, because we have to include this year too, which is 2025. So that's what we have 6 months left. So I would say 2 years and a half, we're going to be anywhere between $15 to $29, right? $15 to $29. Now, before you're like, Al, I just don't believe this. Hey, I'm putting my money where my mouth is, whatever the saying is. But let me show you something here, okay? So if you go to market sentiment intelligence, right? Almost like the CIA, right? Kind of weird how it sounds the same, doesn't it? So if you go to the PLTR here, right? And if we go here and run analysis, smart money turned bullish here, and you could say 1 quarter, 2 quarter, 3, 4, 5, 6, 7 quarters. And this tells you when smart money turned bullish. And as soon as smart money turned bullish, 1, 2, 3, 4, 5, 6, 7 quarters, we literally went to the freaking moon. We went to the moon. Okay? Right? Almost like Mr. McMahon, right? You're fired, right? To the moon, right? So we went to the moon. Okay. So now let's look at Clover, right? Let's look at Clover. When did it turn? Oh, it just turned bullish. It turned bullish. It did turn bearish here. See how it can also gives you exit signals, so it can help you with shorting stocks too. I don't advocate for shorting stocks. I do not short stocks, right? But still, data, right? So so 7 more quarters out, we're in the middle of 2026. Ladies and gentlemen, what happens if I were to tell you Clover does so well that it starts trading into future free cash flows like Palantir? Like I said, in conclusion, you will be shitting bricks. Maybe that should be the output for the intrinsic value. You type in the numbers and it'll say, Al said for the bull case, you will shit bricks of money. Enjoy your life and don't spend it all in one place. Signature Al stock trades. Oh, okay, guys. Right. If that happens, I'm done. I'm out of here. Right. For folks that are out there that are watching, if you would like to thank me, only do this if you have a lot of money. Don't do this if you don't have a lot. I don't want you, right? But if you become multi-millionaire, and please talk to your wives before doing this. Before your wives come to me and they want to kill me, I would like you to record yourself going to your boss and say, "Watch your mouth," and go to your boss and say, "I quit," right? And then just be creative. And I want you to send that to me. And I want to create the longest slideshows of people breaking out of the matrix, right? And yeah, that will be fun. And I want that to be played on my funeral, right? That'll be great, right? That'll be really nice, right? Because that's the goal, right? The goal is to break you out of the matrix, right? So for all the individuals that have seen our software and that have seen the research that we're doing and the due diligence, and obviously you've seen the performance, ultimately, you've seen the performance of what we do and where we are, right? You've seen the performance. You know where to find us, right? I've made it incredibly easy for individuals to calculate the stock price. I made it incredibly easy for you to talk to over $45 million of net worth, right? And I've made it incredibly easy for you to purchase this platform. You have Affirm, you have PayPal, you have multiple ways of being able to essentially purchase this and being able to finance it at 0% interest for 6 months. And if you want to go longer, we can go up to 36 months, depending on your credit score. There's been a lot of people that have purchased lifetime access, and we have members all around the world. Again, as you can see, the only opinion that I've had in this video is that I said that you're going to be shitting bricks of money. Now, I think that is backed by data scientifically. Now, I don't think it's going to come out of your asshole, depending if you stick it in there. But I will tell you, imagine someone walks in the room, hearing that. Imagine someone walks in the room, and like, "What are you watching?" Like, "What are you watching?" "I'm watching how to make money." What is this, OnlyFans, right? Right. So what's this guy? What kind of investment channel is this, right? The point is, guys, is I found a way out of poverty. I found a way out of homelessness, and it's not just any way out. I'm a multimillionaire now. Okay, I found a way out. And instead of keeping it to myself and being quiet and hustling quietly, I'm showing you how this is done. And if you want to live a lifestyle like how I'm living right now, you know where to find us. We are here. Okay? So, let's see. Al got me back into trading 2021. See what's here. Michelle gave this. What is Cracker Jack? I've never had any Cracker Jack, right? Cracker Jack. Right? Take this job and shove it, right? Breaking out of the matrix, always staying humble and thankful. Absolutely. Right? I'll want my diaper full, baby, right? I want it full. I want it full. Cue Terminator theme music as I show up to my work in a helicopter. Dun, 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 right? Clove doesn't have a limited use cases, though, has sizability, moat, and healthcare AI applications. PLTR has a limited use cases. Clove is incredible value at these levels and can easily 10x within 5 years, 100%. And the thing is, the big thing is it's actually being used in the care management process. Palantir is being used right now in the organizational schedule for Cleveland Clinic. How do I know that? I presented at Cleveland Clinic, and I've done some work with them. So Palantir has a connection with Cleveland from that regards. So that's pretty, but for Clover, Medicare and overall the expenditure of healthcare is going to approach $1.2 trillion. And the only person that's out there that's AI related for Clover that's actually reducing medical cost spending is Clover, right? Maybe just gold nuggets, hard to shit on entire brick, right? Now it's going to be bricks. It's going to be bricks. There's no nuggets. These are nuggets, right? All your cash secured puts, these are small little gold nuggets. If you want bricks, right, you got to wait for those, right? Right. Let's see here. You show us because you love what you do. Absolutely, right? Because I want you to show how this. I want to show you how this is done, right? Actually, it's $1,200 off, not $420. Right, $1,200 is better than $420. It's almost double. Right. I will be multimillionaire too. Absolutely. Al, you should make a video of you to pretend quitting your job you never needed and make it go viral. Honestly, I should do that. Why I'm quitting medicine. No. I am not quitting medicine. I love medicine. I love taking care of people. You can have all the money in the world, but you have to do something with it. You just can't you can help people with making money, but I don't know. There's a soft spot for medicine for me. I've wanted to be a doctor since I was a kid, so anyhow, yeah. Oh yeah, 10x in 5 years is base case. I think it can be much higher. Absolutely. Sup, Al? Can you see the live dark pool usage? We are back in apps. Oh yeah. So you can look at the live usage right now on dark pool in our stock terminal. In fact, before we head out, let me just actually do something real quick. Yeah, of course. I know. Yeah, of course. Yeah. Michelle's like 420 is marijuana. I was like, yeah, hello. And you know what 69 is? Right. That's something else, right? You should Google that, right? So okay. Right. Innocent Michelle here. Innocent Michelle. Right. All right. So here it goes. I'll go and let's go ahead and do Clove. And then we'll do actually sharing of the screen. Let's go ahead and do the algo flow. We'll do algo flow right now for Clover. And based off of what we're seeing, yeah, algo flow is going up for Clover. So I think that we are slowly going to be I think we're going to increase, right? So that's what it says. Again, any opportunity that I can buy the dip, I'm buying the dip, right? And that's kind of where we're at. And there it is, guys. I'm very excited. Yeah, there it is. Hi, folks. God bless you all. I'm going to enjoy the rest of this beer. Cheers to all of you. God bless you. And I will see you on the next one.